So as you see on the screen, the basic factors in the any cost of production is first the material cost. So material cost is our bill of material, the basic raw material which is required to produce the product. So the quantities we know, and as per the prices which we will procure it from the market, it will be our material cost. Only raw material will not suffice our requirement, because to convert the raw material into semi-finished or finished product, it will require some manual or some machine activities, which we called as the operations. So under operations, we need to perform some activities to convert that raw material. That may be cutting, there will be there, slicing will be there, there will be some machining or powder coating activities, which will be happen in manufacturing scenario. So for any production costing, there will be some activities as per the type of product, as per the necessity of that production method. And there will be some time will be required to perform that activity. And there will be some cost which will be associated with it. So by calculating this production cost and the material cost, we will get to know the cost of goods manufactured. This is the simple example of cost manufactured, which we do in our daily scenario as well. Now coming to the SAP product costing. Let's consider one example. We have one BOM where we have the material M. To produce material M, we are requiring the raw material 1 and raw material 2. Let's take the example, we are going to manufacture the wooden chair. So the raw material will be required, which is the wood and some consumables or screws. So first we will have the BOM. In our BOM, there will be the two materials and the quantities, which will require 100 piece and the 10 piece. After calculating the prices will be your moving average price on that date of the raw material, because there will be fluctuation when we procure the raw material over the period. There will be fluctuation, and as per standard, we should carry the moving average price for the valuation of raw material. So on the basis of raw material which you have on that date, and by multiplying the quantities which is required to produce that product, we have this the BOM and the material cost. So after material cost, as I said, there will be required some operations to convert the raw material into semi-finished or finished product. So there will be the routing. In SAP terminology, the operations or activities which you perform on the raw material are called as a routing. You need to have your routing for all the finished material, which is updated in the SAP. So in routing, the first important field is your work center. The work center is a SAP terminology. In real life scenario, this is nothing but your machine. So you have the 4 machines, 10, 20, 30, 40. For all your machines, there will be some work center will be assigned. Again, for that work center, there will be some cost centers, because you need to carry some cost which will be incurred for that specific machine. Let's take example, we have the cutting machine here. So on that cutting machine, there will be the cost of the employees, some labor will be there. Some electricity cost will be there to run that machine. There will be some depreciation or some consumables, and some coolants or utilities will be required to run that machine. So in SAP terminology, there will be the routing. We will have the work center for every machine or the group of machine, and the cost center will be associated to that work center. Now, when we are saying about we have the machine, we will have the cost centers. So there will be the set of activities which is required. Let's take the example that we are now doing the cutting of this wood, which we have procured for production of the wooden chair. So once we have the raw material in place, we have the machines in place. So there will be some time required to set up that machine. So that time and the rate which we can update in the SAP, and accordingly the SAP will calculate the production cost. So there will be some setup time will be required. After setup of machine, I will require the 1 hour to set up that machine. And the cost which I will take for the setting of that machine will be 10 rupees per hour. Then to run that machine, I will require the labor. So the 3 hours labor will be required and the cost associated with it will be 30 rupees per hour. The calculation of cost I will come to it after completing this box. So we will require some machine hours that we need to run that machine to perform that activity, and the time which is required to run that machine to produce one quantity is 4 hours. So I have the cost associated with that machine is my 50 hours. So this will be my total production cost, and I will need some extra overhead like material handling overhead. I will need to have some packing overhead will be there. It will amount to rupees 100. So it will be my production cost. Now coming to this rate. So in many companies, they are facing the issues while calculating the cost, which is called as the activity rates. So for every machine, we can define the activity types in SAP. The activity types is nothing but this is a setup, labor, and machine. We can detail it out further in the depreciation or the utilities. So for calculating the labor hours, you need to consider the total labor cost which is required to run that machine for your next year production or as per your AOP base. So you have the 10 labors which is required to run that machine to have the output as per your desired capacity and your sales volume. Then after having the total labor cost and the labor hours which is required, the standard labor hours which is required, you can get to this labor hour rate. So for calculating labor hour rate, you need to consider the total labor hour cost and the hours. Same for machine hours. So the machine hour rate is in this machine hour rate, I have included all the consumables which is required, the electricity which is required, which is the substantial component, which is every company is facing, that my electricity cost should be absorbed in our production cost. So there is a component of electricity. There is a component of some utilities like some coolants or some diesel which is required to run that machine or the product. There will be the depreciation, which is again have the substantial amount over the period of time, which you need to consider in the calculation of product cost. So after considering all these costs, you need to have the standard machine hour, which is required to produce that hours. And by dividing it, you can derive at this rate. In SAP, the best practice is to calculate the activity rates at the start of the year based on your future budget or AOP for the next year and set up that rates in the system. So these rates we can maintain as per the per machine or the group of the machine. If suppose you have the 4 lathe machines and you have the same rate, you can maintain it with the group of machines. Then system will automatically collect that rate, and the routing, which is the operation timing which is required, you can update and system will calculate the cost. So going ahead, now you can see the total material cost I have, and the total production cost is 490 and the overhead is 100. So now we can have the breakup. That's my material cost is 700. My activity is 300. My subcontracting cost is additional subcontracting cost is 200, because if I want to send that chair to the subcontracting for some polishing or some coloring, so that cost also we can include in this product costing, which is subcontracting cost. And I have to incur some additional overhead of 100 rupees. So my total cost will be 1,300 with the breakup of these activities. So this is the breakup. We need to have some basic BOM where we have the breakup of raw material. Then we have the routing, and you can arrive at the total cost. Just as by the industrial scenarios, we need to consider all the cost which is required to produce that machine. And for that, the calculation of these activity rates and the raw material, which is very important step. Let's take the example of this iron plate, which is the raw material is required is a coil, and the finished material after we do the slitting process, which will be having this iron plate. So now coming to the SAP terminology, in SAP, there will be the BOM, which is bill of material. For every finished product, there will be the BOM, which gives you the details of raw material. Here we have the raw material as a coil, the quantity required, and the scrap which will be generated from that raw material. That also we can maintain in our BOM of material, bill of material. The next is routing, which is nothing but the operations. So here you can see for every material, you can maintain the routing, which are the operations which is required. Now here it is only the big slitting. There will be the set of activities will be there. Some machining work you need to define, some slitting will be there, painting will be there. All the activities or all the work centers you can mention in this routing field. Then you can give the efforts which is required in minutes or in hours, which is required to produce that 1000 kg. So we have considered the base quantities is 1000 kg, and for producing it, we will be requiring the direct labor, the process cost, and the power. So this routing which we have given. Then this is the work center in SAP. As I said, the work center is your machine. This is a big slitter machine. We can maintain the validity for the same. We can assign the cost center for the same. We have now assigned the cost center as a slitter, which will carry all the cost which have booked on this particular machine. Now we have done the breakup of your cost that we will be having our direct labor. Then we will be having some process consumables. Then the power cost, which is the electricity cost, which I need to pay to run this work center or the machine. Then there will be the depreciation part. Some factory overheads will be there, and some allocable overheads, which will come after the allocation from some common cost centers. There will be some common cost, and at the month end, you can allocate it. So this is the work center which you can define in the SAP. On this cost center, we will be having all the cost and the production confirmation cost also, where you can find the over and under absorption of that cost center. These are some basic SAP T codes with which you can create or change or display the work center. This is the activity type. So here we have defined the activity type as direct labor. You can define maximum 6 activity types in SAP as the direct labor, machine, setup, depreciation as per the industry need. So here, this is the direct labor we have defined, the validity we have given, and the cost element and the activity unit we have given. We can define the minute or the hour. So based on this activity type and cost center in combination with those, you can define the activity rates. So this is the activity rate updation screen. You need to first calculate the activity rates in your Excel or in out of SAP, considering the AOP of next year, considering the production volume and your plant capacity. Based on it, you need to have the activity rates with this activity type breakup. So here I have, for this cost center, I have maintained the activity rate per minute, which is required to produce the operations. So this 1000, 2000, this is nothing but the activity types which we have defined here. The direct labor, the process consumable, the power. The main crucial thing in any product costing calculation, whether it is in SAP or outside SAP, is to derive at this cost and to consider all the costs which is required to produce the product. So the advantage of doing the product costing in SAP that you can define the activity types, and you can get the details as per activity type. Just to analyze in future whether my raw material cost was higher or my depreciation was higher, or I have incurred more electricity cost in last month. So it will be helpful if you can maintain this rate with this breakup. So this is a cost component structure that we can get from SAP product costing. So the material cost, which is the direct cost of material used to produce that product. The example is steel, as we take the example of coil. Then there will be the labor cost, which is required to produce that machine. The assembly line labor will be there. Their cost and the hours which are required that we need to consider to arrive at this total cost. Then there will be some overhead cost. As I said, there will be some rent, some utilities will be there for this production, which is directly related to production. Then there will be some administration cost, which is salaries of office staff or some common expenses that we will allocate after having one base cost, which is required to, this part is required to calculate our sales price. All the cost which is related to after producing the product, which is for sales and marketing, all these common costs, which we will include, but not in the inventory valuation, but in the sales price. Then there will be some distribution cost as well. As I said, there's some shipping fees or some cost which we will be incurring. So in SAP, you can get the breakup as per your wish list, as per your reporting, or as per your analysis parameters. You can have the breakup of this. So this is the cost component structure which we can define for every finished product. Suppose we have the total cost of 100 rupees that we can bifurcate in these many parameters. In material cost, you can get the breakup of per unit cost or as a direct material and the scrap. If you have included the scrap in your bill of material, the percentage you need to give or the quantity you need to give. Then the breakup of production cost, the direct labor you can get, indirect labor you can get, the operating material, setup cost, subcontracting cost, these breakup you can get. Then there will be some manufacturing overhead you need to have, as I said, like electricity, the breakup of electricity, utilities, depreciation, or packing cost. So these minor details you can get from the SAP product costing, even if you know that, yes, I know I have the total cost of 1,000 rupees, but what is the breakup and in which parameters the management or the company needs to work. The SAP gives you these details where you can take the decision and you have the cost transparency. So this is the SAP screen. In this way, you can set up your expectation from the cost component structure, and you can get the breakup of your each and every semi-finished and finished material cost at this level. So there, as I said, there are some labor will be there, power will be there. So these cost you need to update once in a month. This is a month-end activity from SAP. So at every month end, you need to take the cost run of all your FG semi-finished materials, and you need to update that cost. Once you will start updating the cost every month, you will be able to compare the cost from last month and this month, and you can check the variances if there are any, and you can take the decisions. Here you can see the fluctuations in the raw material also. There are some industries where they have the raw material as a copper wire or some steel component or zinc component, which is very much related on the commodity market, where there are high fluctuation cases are there. So in their case, the analysis of all the raw material cost which is incurred at every month is very important as per the industry scenario and for decision taking. So SAP allows you the functionality to analysis the each and every cost of every raw material which is required, and you can have the monthly analysis of all the raw material. At every month end, you need, as I said, you need to take the costing run. I have, suppose the current month price is 10. At every month end, I will select all the materials which I need to take the costing, or as per in the plant, which is plant specific selection also I can have if I have the multiple plant. Suppose I have the current price is 10. I will calculate the price. The system will calculate the price on the basis of the bill of materials which you have maintained for the specific finished product. Then the operations which you have maintained, that we have already seen, which is routing, the activity rate and the quantity which is required, or the hours which is required to produce that product, and if any overhead or any costing sheet you have assigned to have the additional cost, that all SAP system will consider and arrive at one total cost of production. Once this is done, the system will mark that your standard cost estimate and assign it in the future price. You need to analyze the difference between the 10 and the 15. As I said, if there are any changes in the raw material, or if there are any routings are changed. Last month, I am saying that this operation is required 2 minutes. In this month, any operator has changed the routing. If there are any changes in the activity rate is there, or there are some cases that the raw materials get replaced. There are some frequent changes in bill of material, or if the part is replaced, then also there are the impact on the cost. But the analysis of this difference is very important, considering the cost controlling and having the product cost under control. So before releasing this, there is a facility that you can analyze the cost and the variances, if any, or you can do the correction in the BOM before releasing the standard cost. Once you release the standard cost, this will consider as your inventory valuation at the month end. All your finished and semi-finished inventories will get updated with the revised standard cost. So it is very important to analyze the standard cost before releasing it in the SAP. Or your inventories will get revaluated, and the proportionate accounting impact will be there. So my last month price was 10. My current month's price is 15. So in this way, for all materials, you can have the differences between the current price and the future price. The benefits of standard costing, as I said, there is an enhanced cost transparency, because you can get your breakup of your total cost as per your wish list, as per your cost breakdown structure. There will be the different scenarios. Some food industries will be there. They will be requiring some different cost method. There are some district manufacturing companies, some chemical companies. There are some manufacturing, they have the highest setup cost than the actual production hours which is required. So in SAP standard costing, it is very flexible, and you can do the product costing setup as per your company's wish list, which gives you the cost transparency, the cost control. You can analyze it and you can take the corrective actions. You can do the variance analysis. As I said, you have the standards as in your mind, and when you come to the actuals, you can have the analysis for the same. Suppose you have calculated the activity rate for the machine, considering all the factors of the depreciation, the electricity, and you have calculated the labor cost, and you have updated the rate as 10 rupees and 15 rupees. Over the period of time, after 3 months or 6 months, if you analysis of that work center or that cost center which is related to that machine, and you saw that the actual salary is very high than what you have budgeted at the time of activity rate. So then there you have selected the labor rate as 10 rupees per hour, but due to the some increments or some changes in the labor or the labor skill, you are incurring more than which you have budgeted. So there you can see the under over absorption per machine, and you can take the corrective action. Similarly, if you have considered the machine hour rate, considering that this machine will have the electricity cost said as per your thumb rule or the cost allocation rule, that 5 rupees will be the standard price, the standard activity rate. But over the period of time, you are saying that there is more electricity cost which is needed. to run that machine. Then you can see the over under absorption, and then you are able to change your.
ते duplicate records दिलेले आहेत त्यांनी.
Sorry, then you can change your activity rates as per your actuals. Many industries are facing the issues that they have some standard rates in their mind, and as per the actuals, when they are coming to the product cost calculation, they are seeing that there is a high difference. But SAP allows you to analyze it and to change the activity rate to have the next month standard costing with your revised rate. On the basis of this costing, you can have the streamline your budgeting and your forecasting. Some companies that follow the budgeting or some forecasting for next months. If you have the basic cost and the basic breakup of your standard cost, which is near to accurate, then you will be able to forecast it in a better way. That's all from my side. Any questions? Just before that, we will be having the series of product costing. In next series, we will be covering the cost object controlling and the COPA reports or the profitability reports. This webinar is to just give the basic idea of how product costing works in SAP and how you can calculate in your manufacturing product. So I would like to answer any questions if there are. Okay, so I hope there are no any questions and you have understood the basics of product costing. Thank you so much for attending this webinar. And
is this presentation accessible?
Yes, we will share it.
Thank you so much.
Yes. So thank you all for attending it and looking forward to join our next webinar for cost of object controlling and the COPA reporting.
Thank you.
Thank you, Saili.
Thank you.
त्या मध्ये ईमेल आयडी नाही म्हणून पण आपल्या याला पण आपले ईमेल आयडी लक्षण अपडेट केला आयडी चेक केली.
Yes.